The Global X Nasdaq 100 Covered Call ETF, ticker QYLD, is a fund that's designed to offer investors exposure to the stocks that exist in the Nasdaq 100 index while operating a covered call writing strategy on those positions in an effort to harvest option premiums. The fund is passively managed, replicating the CBOE Nasdaq 100 Buy-Right V2 index by purchasing all the stocks that make up the Nasdaq 100 at the weights that match the index. It's then operating its covered call strategy in a systematic fashion by writing call options on a monthly basis on its full notional balance. The fund operates this systematic roll strategy by writing at-the-money European-style index call options on a monthly basis, with the options being rolled in succession to acquire premiums month after month. Then, a portion of those premiums is distributed out to fund shareholders. QYLD utilizes index options, which are some of the most liquid options on the market. Its options are also European in style, which means that they can't be executed until their expiration date, and they're settled in cash. So QYLD doesn't have to worry about executing stock transfers in the middle of a roll period should the price of its reference asset, the Nasdaq 100, move into the money, meaning that the option has become exercisable. The fund looks to write its call options at the money, which means the price at which the option can be exercised is equal to the current price level of its reference asset when the option is written. This is done in an effort to attract the highest possible premium value, which stems from the logic that option premium values and moneyness share a positive relationship, where the closer an option is to being in the money, the higher a premium value a call writer can expect to collect. So as a function of our process, we write our calls at the money, we proceed to collect our premium, and then we distribute the lower of half the premium received, or 1% of the fund's net asset value, or NAV, to shareholders, and the balance of the premium is reinvested back into the fund to support its overall asset base. Pursuing this type of a strategy in a straightforward, passive fashion within the ETF structure can allow investors to know that their positions are being managed precisely and efficiently. The weights of the stock positions are being managed to remain in line with the CBOE index, and investors don't have to worry about repeatedly selling covered calls themselves to keep the strategy intact. Utilizing this systematic structure, the fund is attempting to weed out certain factors that might make it more difficult for investors to gauge what the fund's premiums are going to look like on a month-to-month basis. For instance, the fund is always writing its options at the money. It's always doing so with contracts that have 1 month until expiration, and it's always writing calls with a value that's equivalent to the notional value of the fund. When keeping these factors consistent, it essentially leaves only market volatility and interest rates as primary influencers of premium values on a month-to-month basis. And by utilizing the ETF wrapper to execute this strategy, trades are expected to be performed at a time at which they're designed, and distributions are scheduled to take place month after month. In its 11+ years on the market, QYLD has never missed a distribution payment. So for investors looking for a source of distributions that may be able to prove more generous than traditional bond and dividend investments, the Global X Nasdaq 100 Covered Call ETF might represent an interesting opportunity. To learn more about the Global X Nasdaq 100 Covered Call ETF, our Covered Call ETF suite, or view our full ETF lineup, please visit globalxetfs.com.